GST, GST, GST. You might have heard this word a lot of time in the newspaper or somewhere else. But you don't know what exactly is a GST or what are the key features of GST. Here I will tell you about the salient feature of GST so that it will help you to educate little bit about the GST. So let's begin. Here is the sum of the salient feature of GST. GST would be applicable on supply of goods or services as against the present system of taxation on manufacture or sale of goods or provision of service. It is based on the principle of destination based consumption taxation as against the present principle of origin based taxation. The two taxes will be levied on the single invoice, CGST and SGST. Central will take its share of CGST, which is Central Goods and Service Tax, and the state will collect and levy the state's goods and service tax. So you have to collect the CGST and SGST on the single invoice. IGST will be levied on the interstate supply of goods or services by the central government, and its credit will also be available for discharging the output tax liability of IGST, CGST and SGST. Earlier on interstate sale of goods there was the CST, which is Central Sales Tax, and the credit of Central Sales Tax was not available for discharging the output tax liability of VAT, which is Value Added Tax. Under GST, the following taxes will be replaced by the GST. In the central level, excise, custom and service tax will be subsumed under GST, and in the state level, the following taxes will also be replaced by the GST, like VAT, GST, purchase tax, luxury tax, entry tax, entertainment tax, or the tax on lottery, gambling or betting. If you have the annual aggregate turnover up to 20 lakh rupees, then there is no need to pay GST. This is the threshold limit which is provided or recommended by the GST Council. And then if you have the annual turnover is up to 50 lakh rupees, then you have the option to pay the tax, to pay the GST at the flat rate without charging CGST or SGST or without considering any notification of rate. And that charge and that flat rate will be flat for all the years, but there will be no input tax credit when you have the option to opt for that one. That is called the composition scheme. So if you are opting for the composition scheme and if you have the turnover up to 50 lakh rupees, then you have to charge the flat rate, and which will be below the CGST or SGST rate. But in this case, if you are opting for composition scheme, then you don't allow to take the input tax credit of the inputs which you are used for manufacturing or trading of your goods or services. And then the export of goods and services will be zero rated under GST. Input tax credit of taxes is to be used in the following manner. The input tax credit of CGST is to be used only for discharging the liability of CGST and IGST. First you have to use that input for discharging the liability of CGST, and then if there is a remaining input tax credit of CGST, then only you can use it for discharging the output tax liability of IGST. Similarly, input tax credit of SGST is first used for discharging the output tax liability of SGST, and if there is a remaining portion, then you can use for discharging the output tax liability of IGST. And then input tax credit of Union Territory Goods and Services Tax is used for discharging the liability of UGST first and then for IGST. And input tax credit of IGST is firstly used for discharging the liability of IGST, and then for CGST, and then for STGST or UGST. Remember that the input tax liability, the input tax credit of SGST cannot be used for discharging the liability of CGST, and similarly the input tax credit of CGST cannot be used for discharging the liability of SGST or UTGST. All the registered taxable person has to file return online, and then you have to pay tax either by NEFT, RTGS, online banking, debit or credit card. So there's also all the things like return filing, payment and the registration is online, so that there is a ease of doing business. And then there is an obligation on certain type of person who are in the recipient of supply to deduct tax at the rate of 1% if the total value of supply under the contract is exceed 2,50,000 rupees. So there are obligation on certain person if the value of supply exceed 2.5 lakh rupees, and they have to deduct the tax at the rate of 1%. I hope this has educated you little bit about the GST. If you want to dive into GST, then check out my other videos. I have discussed in detail about the GST and its various provisions. And don't forget to subscribe if you want to check out the regular update on GST. Thank you.